as we become closer and closer towards the end of 2024 into 2025. A lot of more dividend growth focused investors are still maybe looking into different ETFs and trying to find out which foundational positions they want to build out in their portfolio for years and years to come. Now in this video, we're going to go over two different, very popular, very high quality, foundational dividend growth style positions. We're talking about VIG, the Vanguard Dividend Appreciation ETF, along with SCHD, my personal favorite, the Schwab US Dividend Equity ETF. We're going to go over both these ETFs and talk about which ETF could potentially be better for you if you're a dividend focused investor that wants to build out a super high quality, long-term focused ETF position. So if you love dividends, you love growth, and if you love dividend growth, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, before everything else, let's first of all go back for a second and talk about what I mean about building out a foundational position in your long-term portfolio. Now, this right here is my 7-figure dividend portfolio, which has tons of different ETFs and single stock positions within it. And even though in my portfolio I have well over 40 different positions, different stocks and different ETFs, there are just a handful of foundational positions which sort of tie the entire portfolio together. Now, what I mean by this is some of my larger positions, like my 2,138 shares of SCHD, along with my 1,001 shares of Apple stock, and maybe my 2,711 shares of Realty Income. In my portfolio, I have different foundational positions that are sort of the bread and butter of the portfolio and make up a majority of the portfolio and allow everything to sit on top of it. Now, before we even look into both these ETFs, SCHD and VIG, and sort of compare and contrast both these ETFs, show what they each have to offer, I first off want to say that both these ETFs, in my opinion, could be great long-term positions, and I personally own both of them in my portfolio as we speak. But first, to go over SCHD a little bit, this ETF of course has an objective, which is pretty simple but very, very effective. It's to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. Now, SCHD is popular because it's well diversified, around 100 different holdings in it. It's super low cost to hold on to with an expense ratio of 0.06%. But maybe most importantly, SCHD has grown over time and also raised their dividends significantly. Now, VIG, on the other hand, is of course a Vanguard ETF, and the product summary for VIG is to seek to track the performance of the S&P US Dividend Growers Index. This ETF is passively managed, remains fully invested, and emphasizes in stocks with a record of growing their dividends year over year. Now, as far as expense ratios go, VIG and SCHD are neck and neck at 0.06%. Now, the next thing we can do to compare both SCHD and VIG to see which these ETFs could potentially be better for your portfolio as a long-term position. Looking at the max time frame, they look pretty similar. SCHD is up around 233% since around 2011, or around 13 years now, and VIG since around 2006 is up almost 300%. Now, looking at both these charts, they've both been moving from the left to the right, growing a lot as far as ETF price goes, but of course both these ETFs also pay dividends, and substantial ones. Now, in my opinion, one of the biggest differentiators and one of the biggest reasons to buy either SCHD or VIG particularly, if of course you don't want to buy some of both, would be to look at the top holding breakdowns and see exactly which stocks make up these ETFs to know whether or not you're really interested. So SCHD, for example, has the majority of the holdings in names like Cisco, in names like BlackRock, Home Depot, Lockheed Martin, Chevron, Verizon, Bristol Myers, Pfizer, PepsiCo, and of course Texas Instruments. Now, altogether around 100 different holdings, so although SCHD is well diversified, a lot of other dividend growth style ETFs across the market might have 2, 3, 4, 500 plus holdings within it. But regardless, the names that make up SCHD did have to pass through multiple different screenings, which means they're sort of vetted positions, and all these names at least have the potential to pay more and more dividends over time. Now, VIG's top 10 holdings are a little bit different, some crossover, but right off the bat, you're going to notice that there's some more growth-focused names in this ETF. Now, we have names like Apple, Broadcom, Microsoft, JP Morgan, names like United Health Group, ExxonMobil, and Visa. MasterCard, Procter & Gamble, and Home Depot, these are all the names within VIG, the top 10 names out of over 300 different holdings, so VIG is going to be more diversified. And like I sort of mentioned, just looking at these top names compared to SCHD, these names speak a little bit more growth if you ask me. Now, that can also be evident when we look at the 1-year return. SCHD is up around 23.5% and VIG is up around 31%. Now, that sort of goes back to my original point that I talked about during the intro. Both these ETFs will probably do pretty good long term, but as far as long-term growth potential goes, VIG honestly might take the cake. So now that we talked about both these ETFs objectives, we talked about their top holdings and the fact that although they're both pretty solid, VIG might have a little bit more exposure to growth. Looking at their dividends, their dividend growth rate, etc., SCHD has a 3.43% trailing 12-month dividend yield, which is not bad whatsoever considering this ETF also has grown extensively over time. VIG's dividend yield is around 1.71%, so about half that you're going to get with SCHD. Now this means just going off of the last year or so, that for every single dollar that you invest into either one of these, you're probably going to get about double the income as far as dividend income goes from SCHD. But remember that dividend income is not everything, it's just one metric to make up the entire investment. Now, as far as dividend growth goes, this is how much each one of these ETFs has grown their dividend over time. SCHD over the long term has grown their dividend anywhere from around 9 to 10 up to 11 or 12%. Now, that's definitely substantial considering if you just bought into SCHD a number of years ago, you're getting paid significantly more dividend income than you were back then. Now, VIG's dividend growth is very similar, although it's a little bit on the lower end, anywhere from around 8 or 9 or 10%. But either way, it's still evident that you are getting more and more income that you were paid just a number of years ago, and if history were to repeat itself, you'll probably be getting more of that later on. So this is why I think it's so important, especially for younger dividend growth investors, to build out a high quality foundational position in a high quality index fund into a dividend growth ETF, something like SCHD, DGRO, VYM, something that has a track record, something that has a high quality strategy methodology, and something that's going to pay you more and more in dividend income long term. Because again, as long as you can hold on to your investment, sit on your hands, you're going to be earning more and more dividend income over the years, as long as you buy into something that at least has a track record of growing their dividends consistently. But to compare the both of these, we really have to look at total return as a metric, or how much would you have received if you invested into both these ETFs during the same time frame. So 13 years ago being the metric because that's how long SCHD has been trading. If an investor bought into SCHD and VIG, reinvested the dividends along the way, we're talking around a 13.12% average annual total return for SCHD, or VIG offers around a 12.89% total return. Now, without dividends being reinvested, oddly enough, VIG offers around an 11.75% average annual total return, where SCHD is right behind at 11.6%. Now, either way, an 11, a 12, a 13% average annual total return is not bad whatsoever, which is why I consider both these ETFs extremely high quality and, like I mentioned, are both in my portfolio as of right now. Now, to decide or to know which of these ETFs is going to be a better fit for you, it's likely going to be whether or not dividends are a little bit more important to you, dividend growth, or if you want a little bit more exposure to growth potential. For me, because I'm looking to use my dividend income sometime in the next 2, 4, 6, 8 years, SCHD is my foundational position, but over the last year, I have also been buying more and more VIG as I build out my final shares of SCHD. So although they're both great options, it really decides exactly what you're looking for, but both these ETFs are extremely well diversified, and if you ask me, could be great foundational positions to look into. So now that we talked about SCHD and VIG, two super high quality dividend growth style ETFs, I lastly most importantly want to hear from you guys down below. If you were to have to choose either SCHD or VIG and you could only choose one, which one would it be and why? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.